G'day. G'day, how you going? Phil Tarrant, Property Buzz. It is Friday morning, the 21st of August, and we're frantically rushing towards the end of the year already. It feels like we just had Chrissy. I don't know where this year has gone, and people say that all the time. Fortunately, we've been given plenty of things to talk about this year, and I must admit I'm sort of staying away from social media feeds because I am getting a little bit fatigued with the constant and persistent commentary around property in Australia. But the great irony is I host alongside my co-host Arlene Garman on Friday morning a live stream talking about property. So beggars can't be choosers, I guess. But lots to talk about in property. And what we try to do with this particular podcast is sort of cut behind the noise and give you a bit of a filtered version of what's taken place over the week, and try and make sense of it, what you're going to do about it. And really, is it that big a deal? Lean Garman, how you going?
Good.
We're a bit slow this morning.
12 minutes behind. Thank you, everyone, for bearing with us. Big night. Big evening that we had. Phil and I scheming about what we're going to do in the world of property.
Yes, and who knows? We had our end of financial year, blatant end of financial year, dinner with the content team at Momentum last night.
Yep.
Chin, and the food was over by about 8 o'clock. I must admit, I've already said the restaurant, so I'm not going to give in my view of the food now.
Yeah,
but
it's too late.
The eating was over by about 8 o'clock, and I thought I'm going to be home by.
Wow, how wrong you were.
And mate, I didn't get home till after midnight. And you gave me a hot tip for a TV show.
Yes.
Then I watched three episodes of it.
Did you watch it?
I watched three episodes.
Founder.
Yeah.
Wow.
Yeah.
It's a great
I was
show.
like, this is brilliant. I said, oh God,
I
gotta go
told
to
you,
bed.
I knew
It was
you'd love it.
3 or 7 in the morning.
See,
so,
a lot of our listeners, that what they might not know about Phil, and maybe if you've been following SPI for a few years, but you are a geopolitics nerd. You're an absolute geopol nerd, and it's a good show about kind of counterterrorism soldiers in the Middle East.
Middle East, yeah. No, really good. I'm hooked. So I'll watch the rest of that. But I gave you a hot tip, and for those listeners, maybe we can do a new thing. What we're watching on the television. There you go. It's a new segment. The Offer.
Yep.
On Disney and Paramount is excellent. It's excellent. It's about the making of the movie The Godfather.
Yeah.
Good Hollywood
That is
intrigue,
good. That sounds
sort
good.
of mobster type thing. Highly encourage watching it. But what has that got to do with property? Well, not a lot.
No, we'll
really.
work it out. Are you watching The Block to make it? No, I've
It's
never
like
watched
the 20-something iteration of it, right?
Yeah.
I don't know.
Yeah.
It's not really a show around property.
No.
know?
And you know what? Like, ironically, and not to knock it, but when you genuinely do these renos in like 24, 48 hours, some of the quality is really bad. It's really bad. Like, my wife watches it, and I was kind of just overhearing it, and they had this thing last week, and any one of our listeners, correct me if I'm butchering this, but they had to rip up tiles because they laid the tiling on a shower flat. But obviously when it's flat, there's nowhere for the water to run.
Yeah.
Like, you're not getting good quality at the end. I don't know. I probably wouldn't buy a block house because the name of the game is to do it as cheaply as you can and as fast as you can.
Well, the idea is it looks good, but the quality of the build, and you've got, the professional trades. I think every sort of contestant has a sort of connected builder that does all the sort of more sophisticated stuff, and they use licensed and skilled trades for certain things, but a lot of it is the sweat equity. The one thing you could probably get out of it as a property investor is that if you want to get into the business of doing up houses to rent them out for more money or to flip them, a fair bit of the work you can do yourself. A lot of the real manual crap work, it can be done, and you can save some money there, but it's time and expense, right? Like, you're better off doing something where you're making money and paying someone else to do it. Yeah, I watched the sort of first couple of series of it, and it's just a bit of drama and
it is.
and stupidity, and maybe they should get us on as judges on the block. That's what they need.
I was worried you were going to say contestants. I don't know a thing about doing stuff.
Don't you?
No. Do you?
I know a fair bit about nothing.
Yeah.
Yeah.
I mean, look, I'm probably smart enough to not lay a tile flat.
Yeah, I can tile.
Mind you.
I'm not a bad tiler.
Yeah.
Anyway, property buzz. So today, a couple of things, Liam, going on. Friday morning. So for a moment in time, yesterday, I think Australia marked $1 trillion in debt.
Yep.
I think it's about 37% of GDP.
Moving to 2 trillion when you sum the states in as well.
Yes. So I think that's at a sovereign sort of, federal level, was it 37% of GDP, which, $1 trillion sounds like a lot, but compared to other sort of, equivalent-ish countries, it's on the lower side, sort of pales in a significant of US debt, and even I think like in Germany, for example, the sort of debt is like 7% of GDP or something like that, right? So, it sounds bad. It's dropped back down under $1 trillion because of some stuff with some bonds that sort of got moved around, but $1 trillion in debt. I don't know. Is it really a story? Who cares that much? The question to ask is, how well are we spending the money we got right now?
Well, that's the thing. I would give a little bit of a shout out to our colleagues over at the Sydney Morning Herald because, look, I'm not a big fan of the SMH, to be honest. Independent always. I struggle to see it. But I do give them a little bit of a shout out because they've been hosting a fair few opinion pieces, and I've noticed over the last few weeks there's been more commentary around needing to rein it in. And it's not something that I would have expected to have seen from the Sydney Morning Herald, but hosting a number of opinion pieces to say we're actually going to have to rethink this. And I think it's a wise time to do it. The so what, in the world of property in particular, if we're going to forecast, and this is going to hit the New South Wales bottom line really hard, and now you've got potentially the Treasurer just months after the state budget potentially having to revise state revenues down by like $800 million, it's going to get worse. It's going to get worse. The gap is going to grow. So where do we go from here? And what we've seen over the last, several decades really is that productivity has been declining. And the only productive part of the economy, and far smarter people than myself in terms of economists have said, well, the only productive part of the economy is the importation economy. It's immigration to bring people in to do jobs artificially that would not have existed otherwise. So if Labor also comes in and spooked by One Nation on their flank, especially in their more working class electorates, and you go and cut migration, it does raise questions over the state and the health of the Australian economy more broadly. Now, what's that going to mean? I know you and I were musing about this last week, but if the economy does drop, does it mean interest rates go down? Maybe. If the state of the construction industry keeps faltering, does that mean we're not going to have more supply? Well, maybe. And I suppose the irony is, and as investors and property owners, when you factor in that, well, the construction industry is faltering, well, the economy is not that strong. So could you perhaps have that supply demand disequilibrium and also lower interest rates? You could see a reversion in house prices, I think, sooner rather than later. But is that a good thing? And the question of, is it a good thing given that you're going to have asset price growth in terms of housing at the same time as an economic downturn? Well, that means your average punter, your average Aussie is kind of worse off at the end of the day. And it's a very unfortunate thing that this asset price inflation isn't for the betterment of people at that point. It's because we are in a financial disequilibrium in what we're doing as a nation in terms of supply and demand.
Yeah, the migration aspect is interesting, and it's getting a lot of coverage at the moment. One thing that's starting to enter the debate a little bit now around the migrant communities is just the staggering amount of money that is generated here in Australia within sort of migrant communities that goes back to their country of origin.
Remittances, yeah.
Yeah, I think it was $56 billion.
Yeah, it's billions, yeah.
$56 billion was the latest numbers there. Is that 2% of Australia's GDP, right? Goes back offshore. 7.3 billion to India, 5.35 billion to China, and a whole bunch of money goes out also to the UK and the Philippines, Vietnam, and France, and places like this. So, this is this migrant story. If you come to Australia, you do well, and then you send money back home to support those family. Now, some people on this growing debate around is like going, well, that money should stay in Australia and buy things in Australia, and for the purpose of buying Australian-made goods and keeping that money here. But then you have this discussion around, well, imagine the inflationary effects if all that money was actually being spent in Australia. And this is where you start, if that money was here, there's going to be a lot of positive pressure on prices, including rents and housing and all this sort of stuff, right? If there's more money in the system, what typically happens is that prices go up.
Yeah.
So this is a real balancing act that, it's starting to gather some currency to this discussion. I don't really yet have a position on it.
I mean, look, is it inflationary? Yeah, but inflation isn't a bad thing if it's genuine productive growth. Yeah. If you're going to say that $21 billion, typically now when you're lower socioeconomic in terms of your spending, your discretionary spending is far higher, which is actually a very good thing. So your discretionary spending in terms of going out and buying, food, buying coffee, the basics, that is typically quite healthy spending because you do grow small businesses. It's the discretionary spending when you're in a higher tax bracket is less productive for the economy because you buy high value items. You might buy a really high value Ferrari, and that kind of goes offshore. That's not very productive spending. Would it be inflationary? Yes, but good inflation. Good inflation in so much as the economy is growing and aggregate demand is growing, which is not the worst thing in the world, and it's better to do that than by government spending. I think it's a very bad thing. I think it's a very bad thing, and we had this week as well that the government came out guaranteeing the minimum wage for the kind of gig economy, the
Uber Eats type people.
The Uber Eats, again, appalling. In my opinion, I think it's an appalling thing because it firstly makes no sense.
What doesn't make sense?
We are talking about a job here which is, there is an equilibrium. You deliver food if someone orders it. Now, Uber is going to pass that, presumably, onto small businesses.
Yep.
Small businesses are going to hurt. Now, why do I think it's a bad thing? I use the term appalling. Why do I think it's bad? Because there are a lot of people, and I don't use Uber Eats anymore. I don't use DoorDash. I used to, but now whenever I go on DoorDash and I look down, I'm like, oh my gosh, I've got a Big Mac meal there. I'm paying $35. Like, what's the point?
Yeah.
What is the
how
point?
much it costs?
I don't know. I'm just plucking a figure, but it's very expensive because it's like $7.
I have never ordered food from an app. Ever.
Yeah, I haven't done it for months because I look at it because you got like a $7 surcharge, and then the small business obviously has to recoup costs, so then they inflate their price as well. I think that given especially that a lot of people that are delivering food are new migrants, well, they're going to be out of jobs pretty quick. Because suddenly, if you're going to be paying $35-40 for a bloody burger delivery, you're not going to be using the app anymore. So what are we going to do with this surplus labor?
Yeah.
Genuinely, like what do we do with this surplus labor?
Well, I don't think there's surplus labor because maybe there is because some numbers come out just this week, and it says the jobless rate has risen to 4.5% as the labour market cools. So if you're injecting more people into the labour market because of positive pressure on, like you just, I have no idea what the quantum is of workers that operate within those. I think it's just DoorDash and Uber Eats are the ones that get this sort of bargaining, sort of connected code thing. I don't know what that's going to throw into the system, but it is, again, it's inflationary. Prices go up. Is inflation a good thing, bad thing? I don't know. It's starting to get the economy. But one thing I want to touch on, Liam, and I want us to be considered in how we discuss this and give a sense to the sort of property investment advice community, and that is both property investors and those people who are property professionals. Property investment advice. It doesn't matter whether you're buying a house to invest or a house to live in. There is a cohort of professionals connected in with that across that supply chain. Now, I've been reading a lot of stuff produced by your team, particularly with an REB, and there's pressure mounting on real estate businesses, which is intrinsically connected with the slowdown in property transactions. Less properties getting sold, and we're seeing the flow and effect with this, with tax receipts from state governments are dropping because property transactions are fewer, and and if prices are dropping, obviously inherently stamp duty will come down. A lot of property businesses are under pressure. I think, it's becoming very apparent that some organisations operating in the buyer's agency space are under pressure. Now, this is an industry that has grown and evolved over probably a 20-year period. And I've sort of been a great privilege to watch how that has evolved over time. And it was a very small, unknown industry many, many years ago. I started using a buyer's agent back in 2013, I would say, maybe 2012. I am, mate.
Yeah.
So I've been investing for quite some time. No one knew about them. No, it was like a little secret that you didn't want anyone to know, right? And then, subsequent to that, you've seen a proliferation of that buyer's agency space, and the industry has had very low barrier to entry. And one of the great ironies around that as an industry sector is, one of the lowest barriers to entry, but one of the greatest consequence for poor advice and execution based on the advice provided by people. So we've seen a number of these buyer's agency business sort of wobble a bit. You're seeing sort of a rapid transformation in that industry sector. But I want the industry to be very careful with how it actually approaches this next phase, because you may get, and we've been talking about for a couple of years, that there would be a consolidation of this space to some degree. You're going to see some very good, they're already out there, but some very, very good operators emerging. And you're going to see some businesses that probably won't be around in the future. And that's just not unique to the buyer's agency sector. It happens in all sectors, depending on shifts and changes to the way in which they make their money. So, it seems that the newest meme amongst buyer's agents is buyer's agents talking about other buyer's agents who are doing the wrong things and making assumptions about it. And I would certainly offer caution to how the industry goes about considering this moving forward. Now, I think you may find some stories coming out which are probably going to show some maybe less than favourable habits and behaviours of some operators, but we should not let that cloud the great work that buyers agents are doing right across Australia, servicing their clients. So, now more than ever before, property investors need to have discipline and diligence when they go about choosing the partners that they work with, and that's not a new thing. We've been saying that for years and years and years and years. So, nothing to see here. It's all the same, but the onus is on investors to ensure that they're making sensible decisions in their partners. And if I was choosing to use a buyer's agent, I would look at time in market, how many cycles they've seen, their client base, who they work with, rather than just the headlines that you may see on social media that I've grown this by X% in 12 months, and look at this portfolio and look at all these millionaires that I've made, and my clients do this, that and the other, and I'm so good that I provide guarantees and et cetera, et cetera.
And I think that's a really wise point of view. It's really wise. Do you want your buyer's agent to have experienced the downtime? 100%.
Yeah.
100%. And this is the challenge that, we see so many buyer's agents out there that have ridden the wave. Now, if the market does the heavy lifting for you, and, it's something that we talk about a lot. Now, of course it does. And of course you want to buy in an area where the market is doing the heavy lifting because there are financial fundamentals to it. But is that all you're buying for? You're actually buying a good asset. If your buyer's agent, at the end of the day, is just plucking something in a postcode because the postcode is good and the underlying asset is meh, or they're potentially overpaying for it, these people are going to have headaches in the time that we're in now. And I think one of the challenges and what we're going to see is, it's to your point, the good operators that have referrals and people coming back and back and back will survive. And there'll be buyers agents that grow. They're going to.
I know. You were out yesterday meeting with well-regarded and you can. It's up to you whether you let people know who it was. Well-regarded and
Victor Kumar from Right Property Group in Reshmi.
He's been around for a couple of decades. Right?
They're brilliant.
They're in growth mode.
They're in growth.
Yeah.
They're in growth, and they're in growth because they do a good job. People come back. That's it. Like, it really is that simple. If your strategy, and one thing that I've been musing on, Phil, is shifting strategies. Because now I went from, pre kind of May 12 and all the buyers agents are out there like, kind of cash flow is a secondary consideration. Let's go for the big equity uplift and be over leveraged, be out of pocket. And that was kind of in vogue before May 12. And now everyone's like, oh, let's all herd into cash flow. And what I see scratching the surface on that is that strategy or that investing philosophy, it didn't stand the test of time.
No.
It didn't stand the test of time. If you're buying in markets where you've got, and I've bought, but it's you have to be a particular type of investor to be willing to do it. But if you're buying in markets where you've got like a mid 3% yield and potentially have a few interest rate rises, you're going to hurt.
Yeah.
And you have to know what you're getting yourself into. And there are buyers agents out there that are flogging this stuff to people that probably shouldn't have been buying these assets because they can't stay in there for the long haul, expecting that the market will do the heavy lifting. Well, that might not be the case. It might not be the case for the long term. But anyway, squaring that circle, it also is a boon time because you're going to have, after this consolidation, to your point, and the good operators, well, they're going to stay.
Yeah.
So, ironically, it's probably a good testing period.
Well, this is, I think, a cycle that this sort of sector needed to go through, and it was looming for it. I think it's just been forced or accelerated by these changes to government policy, right? So a lot of potential cracks appeared as a result of this, which may change, the efficacy of the advice some buyers agents are providing. I think there will be a period of consolidation. I think what's clear and apparent is that, and it's going to take, it's still a very nascent industry, this buyers agency space, even though it's been around for a couple of decades. What's sort of clear to me is it's largely always going to be a cottage industry. So I don't think there is a future for huge, large, big buyers agent businesses. I think they're going to be smaller practices with principals who do the majority of the heavy lifting with some support staff. I think that's going to be the way in which this industry sort of finds its feet. And that's not necessarily a bad thing or a good thing. But it's not one of those industries where, it can be at an industrial level. I can't see it. And there's some people who are sort of bucking that trend out there and able to do it at scale. But as markets change, you need to be able to pivot pretty quickly on things. So the summary of all of that is that all those people out there who are sort of making comments on other buyers agents, talking about other buyers agents and why they're bad and why they're good, I don't think that's very positive or constructive. So this will play out, let it happen. And let's think about how that industry, the buyer's agent space, can best be positioned to support investors. Because they are an asset. I use buyer's agents for buying stuff for not all the reasons why they'll tell you on social media. It's because they do the work that I don't want to do, and they can do it better than me. So that works for me. But anyway, I know your team is sort of looking at a number of different things in that regard.
Yeah, it's a changing industry. It's a changing industry. Also, like just to follow on from what you were saying, I don't want a buyer's agent that works in hypotheticals. And what do I mean by works in hypotheticals? A buyer's agent, and I've been very open with this, you and I have spoken about it on a few property buzzers now, but I don't want a buyer's agent that works in hypotheticals in so much as, well, in a year or two we're going to have interest rate cuts. Well, that never came through. Do you remember a few years ago when every single person was expecting several interest rate cuts this year and we got 3 hikes, right? So I don't want a buyer's agent that deals in those hypotheticals. I don't want a buyer's agent that deals in the hypotheticals of, well, we're going to, like NAB's prediction this week. Well, it wasn't even a prediction. I think it was the prediction of the economist, not necessarily the bank, but that rents would rise by 30%.
Yeah.
If you're working on these hypotheticals to justify a purchase before they're even there, I find it's alarm bells.
Yeah, it's interesting you frame it that way. So people making buying decisions assuming that rents will rise by 30%.
Yeah.
So the yield today might not necessarily be the yield tomorrow.
100%.
And that will help them maybe with serviceability.
Now, if you're buying an investment property from another investor, for example, and you know for a fact that the tenant is the tenancy or the rental agreement's well undercooked, so that's a different argument.
Yeah.
That's driven by data. I've been very open about it on the last few podcasts. I've been dropping rents.
Yeah.
You know, like
So this is people starting to view resi property through a commercial lens, thinking now that the next big thing will be we see value in properties not by, hey, we're going to get this uplift in equity so quickly because we can identify properties which are undervaluing their rent. So we'll buy today, uplift the rent tomorrow, and then that will change the value of your transaction moving forward.
Yeah.
You know, that's probably the next sort of flavour of marketing to come out. I want to do a piece on that. You're going to start seeing that. We you know, how do you increase the value of a commercial asset? Well, you change the lease.
Yeah.
Right.
Yeah.
So you're going to start seeing that coming through as well. Yeah, 30% increase in rents. Again, you know, you've seen if you pundit and you watch what goes on down there in Question Time or in Parliament, you know, everyone's been peppering the government around it, bringing this sort of concept of like, well, you said it was only going to be $2 a week as a result of it. Now it's 30%. So you get this backwards and forwards. It's a nice piece of information for the opposition to hit the government with, and they've traded and transacted on it. The government is sort of saying, well, you know, it's funny how they dance around it, pretty much going, well, this is what we're told by Treasury.
Yeah,
you know, that's Treasury people over there, and you know, we've got to back what Treasury says. So you know, but they also frame it as in going, you're looking at it through one lens. We're talking about the whole package. You know, and everyone goes, well, what's the whole package? What we did see through the week was the widow's tax, inverted commas, was pulled back. I think there's that second tranche of those that legislation went through the upper house, and that's pretty much if someone divorces or dies, and there's an asset connected, which has sort of got a grandfathered provision around negative gearing around it, means it will keep that provision, even though there will be a change of ownership in that structure. So look, sensibility prevails, but you know, that's a long time after those announcements in May for that they get pushed through.
I know.
You know, and if you go back to watching Jim Chalmers on the evening that he defended his budget on the ABC, he sat there clearly and said, yeah, you know, it was a bit squeamish. Like, when did you actually decide that these were going to be the changes? And it would have appeared that it was like 2 to 3 weeks beforehand, right? And then it's taken months and months and months to even, you know, look at some of the nuanced issues related to it, like this widow's tax thing. So, you know, it's people think that if there is a change in government and or the appropriate pressure is applied and the government chooses to overturn its decision, whether it's all of it or some of it, there's still a huge process. It needs to go back through the parliamentary system to actually. You can't just go, oh, yeah, don't worry about that anymore, cross it out, let's continue. It's got to go through a process. It's got to go back through the lower house, got to be debated, go back to the upper house, needs to be debated and approved to certain laws. So it takes time. So, you know.
I mean, I'm not sure whether they followed a process when they were developing the legislation.
I don't know. It depends it depends where you get your media will determine whether or not you think that Australia's in rude health with its property markets or negative health. But all you need to do is look at, and I used last night as an opportunity to chat with some of the younger cohort of that Momentum content team, and you know, you got people from both sides of the political spectrum there, and not a lot of them seemed really bullish about buying their first home.
That they are now,
You know, there's the sort of this utopic idea of we're going to make this cheaper for you, but then the realization that if I do buy a home, I'm going to have a huge amount of debt. Do I actually want to service that? And why would I invest in something which may go down in value and I'll end up in even worse situations? So that's the message coming from younger folk, you know, and first home buyer lending has dropped.
it has,
It's more so the investment
12 or 14%.
It's
or
huge.
Yeah.
So, anyway, Paddy, who was out last night as well, he's been very quiet over there. I think he was part of the karaoke crew. He hasn't actually disclosed.
He's not saying anything.
He hasn't disclosed when he actually got home, but
he didn't.
No,
he didn't. He was coy on it this morning.
Yeah, we're going to do a reaction video. I don't know what you got for us there, mate, but we'll have a go.
Tax the rich. Nobody needs that much money. Pay your fair share. Okay, so let's run some numbers. Last year, the Australian government received almost $717 billion in tax revenue. 52.8% of this came from sources other than individual income tax, and 47.2% came from the individual withholding tax category. This other 52.8% includes things like business and company tax, resources tax levies and royalties, consumption tax, superfund taxes, PRRT, fuel, alcohol, tobacco excise, and so on. So out of every $100 the government received, $53 came from other. $47 comes from income tax. So let's break down that $47. The top 1% paid 16.8% of it. The top 10% paid 43.7%. The top 50% of earners paid 86.7% of all individual income tax, leaving the bottom half of earners to contribute 13.3% collectively. The bottom half of the population. Now, if we combine that total government revenue, the bottom half of earners in Australia are contributing about 6.4% of total Commonwealth receipts through their individual income tax. 6.4%. That means the remaining 93.6% of all Commonwealth revenue is coming from businesses and companies and consumption tax, resource taxes, duties, levies, excise, royalties, etc. So what's fair to you? That portion of society, the companies, the businesses, the resource sector, the top earners, 93.6% is not enough. It needs to be 95%. They need to pay 99%, 100%. What is pay your fair share? Just asking.
I don't know that podcaster. She's cool. That was really good.
Yeah.
Yeah. Was it Jamie? Jamie, was that was on the cup?
No, I don't know.
That was very well argued. Really well argued. So
like, obviously you can paint whatever picture you want with data. But it's an interesting one. That's a good one, Paddy. Thank you. My initial reaction to that is we've been talking about fairness for a while. This idea of like it's not fair. Why is it fair? And the government in particular. If you hark back to their positioning as they presented this budget was, we're making it fairer for Australians. It's been a big part of their lexicon. We're making it fairer for all Australians. We want the housing market to be fairer. We want everyone to have a fair crack at ... whatever their view of what the future for Australia looks like. And you go, okay, well, it's a great democracy, Australia. You wouldn't want to be living anywhere else in the world. There are so many reasons why it's great to be Australian, right? And fair go and all that stuff is very much part of our sort of historic cultural identity, right? And I'm all for it. I think it's great. Everyone should have a fair crack, a fair go at stuff, right? But then you look at the numbers and you go, well, you've got this cohort of people who pretty much they're so all of that money, was it 47% of all the money is what's withheld from people's salaries, right? Yeah. So how do you raise tax receipts? You make more jobs, because if you've got more jobs, that means you've got more people in the workforce and therefore more people paying tax. That would be one of the arguments why the government tries to incentivise to working Australians. This idea of like, whatever your version of a relationship is, but the female stays at home, look after the kids, but no, they want them in the workforce. So no, incentivise that through childcare subsidies and all this sort of stuff.
Sounds like a conspiracy. Sounds like a conspiracy, Phil.
And then you want to lock in younger Australians into these massive mortgages. How do you service that? 2 jobs, right? Yeah. 47% comes from government coffers.
Oh, it's madness.
Anyway, so the point being that fairness is often overlooked when it comes to unnecessarily penalising those people who some would argue are doing the majority of the heavy lifting. And what I talk about there is businesses that employ people, business owners that take risk, business owners who often are regarded as tyrants and the worst people because they're the evil bosses, and we need to sort of work out how do we collectivise against them. And these are typically those people taking risks that invest in assets to provide for a future, proper being one of them, right? So when you see those numbers around, the total tax receipts, 50% of working Australians contribute, was it 6%
Yeah.
to that? That's doesn't really seems a little bit out of kilter.
Yeah.
So that's her argument.
And I think it's wise. Yeah.
Yeah.
In terms of,
So is that fair or not?
you
That's,
know,
comes
in
back to
terms
it.
of the bottom 50%, the lower half, I guess, contributing 13% of all income tax. It's insane, and it's insane. You know, it's an interesting statistic. One thing that I do dwell on is, given that we expect total government revenues to drop, especially if we go back to, and I know you and I have mused on this in the past regarding stamp duty and the reduction in tax receipts from that. Where do you go next? Where do you pilfer next? You know, where? Because when you add in things like the Medicare levy, when you add in goods and services tax, when you add in all of these things,
Mate, your smokes,
Yeah,
your beers getting all taxed,
your
petty.
people are spending well over 50% of their income a year in tax, right? Where do you go next? Where do we make up this shortfall? I mean, you've gone after trusts. You've gone after property. You've now gone after shares and equity. You've gone after businesses. Where do you go? I don't. It's a hypothetical. It's a rhetorical question, because there isn't this big bag of money that you can go after. Maybe it's super. Maybe that's it. Because unless you start acting with a little bit of adultness with the public purse, I don't understand. But I mean, I do like your point with the two working Australians, and it's something that you and I have spoken about in the past, and I think it is worth. I think it's worth mentioning again that you get subsidised. What's the government subsidy for daycare? It's $100 a day.
It's a lot of money.
It's a lot of money.
And it's all means tested, obviously. So
It is.
this is again the irony is that it's means tested. So those people who are contributing the most of the tax coffers don't typically fall inside.
Why don't we just give that $100 to mothers to stay home?
Yeah. Well, there's some great policies internationally around incentivising, mothers.
Yeah, it is that easy because if the government, and I'm sure that there's some policy wonk that's listening. Well, it's not. Well, no, it is because you're giving a business $100 for people to ship their kids there.
Yeah.
So the government's already paying for it. Let the parents stay at home. Gosh,
You open
radical
up a
idea.
whole different. But it's about contribution, right?
Yeah.
And fairness, and it's largely an irrelevant debate because everyone always views it through their own lens. One of the consequences of a fairness discussion is that you do start seeing things out of kilter where maybe those people that contribute less at an aggregate level often have a bigger voice because they're supported by funding arrangements and government bodies to have a bigger voice, right? Unfairly, rightfully or wrongly. So anyway, I don't know what's fair. What I reckon's fair is just be fair to yourself. Just know you're doing the right thing every day as best as you possibly can. And as long as you stay true to your own fairness, it's cut the noise out.
You and I were having a chat last week. Bruce Almighty. Bruce Almighty, when he's talking to Morgan Freeman, when he's talking to God, be the miracle.
Be the miracle.
Be the miracle. Everyone spends their whole life praying for a miracle, but you could just as easily be the miracle for someone else.
Yeah. There you go. Anyway, I got an email in my inbox for all the tax I need to pay.
Good.
I've just done my tax, so
Yeah, nice.
yeah, that'll be fun.
Yeah, that's
Been looking forward to doing that today.
It's good. Yeah. What better way to wrap up the week?
Yeah. Anyway, anything else, mate? We done?
No.
Bit flat today. No. We haven't been too charismatic.
No. Liam.Garman, Garman, at momentummedia.com.au. If anyone wants to get in touch, if you've got any funny videos, thank you to the people that have been sending videos in. If you want to muse, if you want to chat to Phil and I, if you've got any scoops, any story ideas, if you're hearing anything, if you've got any thoughts, theories, send them through.
Are you going to be here next week, or is this our last hurrah for a little
This will be our last. Oh, well, I think we've got one next Thursday.
Next Thursday.
Next
Okay,
Thursday.
we go live on Thursday.
My wife, my amazing, beautiful wife, will probably be very annoyed that merely hours before we have a child, I'm going to be spending my last evening with you.
There you go. Fun and games. Who would have thought? We'll keep pushing through on Property Buzz over the coming period. I do enjoy it. It's good. I don't know if Friday mornings are the best sort of time. There seems to be a bit of a theme because Thursdays typically when a lot of corporate after hours stuff happens. So
mainly just for you. This is the first time probably one of the first times I've been a little bit flatter on this podcast. You do a lot. You're always at little business cocktail events and out and about and shaking hands.
Yeah, I've had a big week this week with that sort of stuff. But anyway, keep up the good work. Your team's doing some great coverage and commentary right across all those REB and SPI and everything in between. So I do enjoy that. Thanks, everyone. This is Property Buzz. If you're tuning into this live, thanks for joining us. We've got to start doing more Q&A stuff, which we will do. But again, for those of you who are tuning into this as a podcast, as you're out and about doing stuff or driving to look at properties on a Saturday morning, I hope you have a fruitful and successful time. I'm watching the markets and it's intriguing what's taking place right now. But one thing you're guaranteed is that this market is just the market. And what it is today won't necessarily be what it is tomorrow. So you need to be dialed in. Picking the bottom's tough, but if you're able to and ready to buy and you've got finance approved, I'll be getting stuck in. That's my play. Thanks for tuning in. We'll see you next time. Until then, bye-bye.